folks, welcome back. This is December 5th, 2023 price action. This is a market review for today, which is on December 5th, for pound dollar. Now, basically, before I start, if you know that there's a certain trade taking place in GU, you certainly know it's happening on EU, Aussie dollar, and the opposite for something like USD JPY, the foreign currencies. So if you're shorting the foreign currency, you're going long on the dollar. Now, we'll be focusing on how it reacted to our kill zones and the silver bullets. So we jump right into the charts. As you can see, we had Thursday's low and Friday and Monday's low, which were relatively equal, as you can see. So retail will treat this as support because, as you can see, market came, went, came, went, came again and again, reversed, came again in the morning today, and then reversed, taking out the buy side and then coming, clearing all the sell side. Now, what ICT teaches us is the short-term bias. We don't have. In the morning I didn't have any bias. I don't do any analysis pertaining the daily bias. All I do is I wake up in the morning, see what the charts have been doing overnight and then the previous day, and then after seeing that, I straight jump into the price action. Now, price leaves signatures, which in relation gives us the bias, the short-term bias. It may not necessarily really be the daily bias. This is not the daily bias. You can be buying and the market is the trend is on a downtrend. Now, if so many people say that the trend is your friend, follow the trend, don't fight the trend, but that doesn't happen to me. You don't need a bias. You don't need to. People say this is choppy, this is consolidation, they won't touch anything, but actually, if you really know what you're looking for, these are the best markets to be in. So we opened right here. This is the midnight. This line denotes the midnight opening price. We went higher, then came down, almost London open, and then we were supposed to buy only if we could have taken the sell side, but the market went. Until you see something that you would really love or like to see or should happen before you execute, then don't execute. So we were supposed to buy from here to the buy side, the relative equal highs, and maybe eventually this high. Price came down, went up. This was around 6:15, and then price came down. It did not take this low inside the fair value gap, and then it rallied again during the New York Open. When I saw this was a signature that price would come crashing down into the sell side, these lows, and eventually this. Now, how do you determine your bias? Just look at the chart, and you see based on time. Now time here separates boys from men. This is how we trade. This is New York kill zone. Now what you do during New York kill zone, you look for signatures that price has left behind. Now for this to happen, price came up near the midnight opening price and then came lower. Now this was a Judas swing. This was it happened before this happened. So this was a Judas swing, something that tricks traders to go long and thinking that it's going to take this high. But we already took the sell side, the buy side, sorry. So there is no need for the market to go up there again, and time is a factor now. So price comes back near the midnight opening price and then come crashing down. This is a silver bullet. Look how fast it went down, taking the sell side and then reversed. This was the news that came out at 10. So we'll jump right into this business and see how you could have framed some entries from there. Go into the 1 minute chart. Now for the folks that have done a good job in following up the ICT mentorship, they could have easily spotted this as their entry. Now I usually don't mark the 1 minute or less fair value gaps. I usually mark the 15 and above fair value gaps so that I can, if I'm in a 1 minute chart, I could actually see what's happening. Now for the folks that know about the 2022 mentorship, this very small gap, very small, could have used that for your entries. Now, oh sorry, not that one, delete that, delete it. As you can see, this candle, look here, says 0.26375. So 375, this high, look there, 0.26374 by a pip. It went past it by a pip. That alone makes it buy side has been taken there. And if buy side has been taken and we had this swing low broken and then a reverse, now it's not a must for it to, it must show the willingness to want to go lower, but it's not a must that you have a fair value gap for you to get the entries. If you have the hindsight of what price want to do, you could go short right in here in this candle. So going short there, maybe you pyramid there. But for the folks that don't want to sell or short above old highs or buy below old lows, so you wait for the swing low to be taken like that, and then these are bearish order block, which means when price comes back, you're entering around that and your stop is around there. Is what I mean. We're going short right there, and this is why ICT concepts are better than any other in the trading space, because look at the stop loss, very small. So even if you're risking $1,000 for that, it's quite okay. So targeting the equal loss if you remember, Thursday's low and Monday's low. This was a 9.4 hour trade. So yeah, that's it for the day. See you next time. Be safe.